So what is seller financing? Why would a seller do this? How can I fund it? Hi, my name is Darren Wright, your real estate investor. So you've heard the theory of no money down deals, and one of those tactics to do that is seller financing. And I've used this myself in a couple of different deals. It's not just called seller financing, you've BTB, rent take back mortgage. It's got different names, it's all basically the same thing. What's going to happen is the seller is going to finance part of your down deposit, or maybe it's going to finance all of it so you can do renovations and sell it. Now, why would a seller do this? They do this because it helps sell a problem. They're motivated to sell this. Normally, well, one of the conditions is they've got to have it paid off. It has to have no mortgage on it. They can't mortgage a property without paying out the previous mortgage, so maybe the finance can do that. But so it has to be free and clear for them to be able to finance their part, especially if you're doing all of it. But maybe they're just financing the down deposit. So I know a lot of buyers say, "Oh, I can't just find properties for seller financing." Well, you're not calling mortgage brokers, real estate brokers, realtors saying, "Will they take seller finance?" No, click, not interested. It's just one of the tools of this property works, how can I fund it? And that's one of the questions we always ask. So one of the questions is the seller finance? Maybe they're not. If they're not, it's not a done deal for us. Maybe they're only going to finance a little bit. It could be a good resolution for both of us. The sellers can sometimes defer some taxes if they're still going to finance part of it, because obviously they're not receiving the money all up front and they're going to get some interest. So it's a little bit better. If they can stretch it over a year, they can ask their accountant and see what's best for them doing that bit. But a lot of buyers as well make a mistake by rushing in and saying, "Oh, I'll buy that property. You have to finance it 100%. I'm going to pay you 0% interest, and you are still taking all the risk." No seller wants to do that. So as a buyer, you need to be responsible. You put the seller first. What does the seller want, and what do they want to get out of it? So most of the time, if you're offering seller finance, you're going to give them the asking price. You can't lowball them, ask for a rock bottom price, and then say, "And you finance it as well." That's just a real kicker in, after the fact. You're kicking them when they're down, sort of a thing. You don't want to beat the seller up and then try and get them financing it. If they're that desperate, then you got to really wonder why they're wanting to do that. And then you get people wanting to seller finance on rentals. They want to collect all the rent, and they want the seller to finance it. And it's like, well, I'm better off I'm making more money if I collect the rent than what I'm getting off the seller finance. So you got to make it worthwhile for the seller. And that's one thing. So you put the seller first, then the property, and then you put yourself last. And that's how you do these seller finances. So you're going to pay full price or near as. You're going to pay a sensible price. Then you're going to work out what the property needs. So if it needs renovations, you're going to work out what it needs that way. And then you work out what you need. So seller gets what he needs, the building gets what they need. And if it works for your numbers, then you've got a deal floor there. If it doesn't work for your numbers after you've given the seller what they need and the building what they need, then you just don't do the deal. It's as simple as that. But a lot of buyers do it the other way around, where they put themselves first and they expect everybody else to drop everything and give everything up, give them the building, finance the renovations, and just give them all the money and let them walk away thinking they're rich. And that's not how it works. That's why a lot of people say, "I can't find a deal, I can't find a deal." That's not a deal. A deal is where it's a win situation, and that's what you're trying to do. So you want to offer them full price, interest rate is negotiable, terms are negotiable when you pay by. But like I give an example with the rents, it's got to be that the seller is getting something better than they were getting before. Otherwise, they can just hold on to that property and keep collecting the rents themselves. I know you're going to take some work off them. So if they're financing 100%, if you're doing renovations, you're going to be putting work into that property, and they're still going to have first claim if you default. And then at least they get a building back better than the state that they gave it to you or loaned it to you. So always put the seller first, and then you'll be able to get some seller financing. If you want more clarification, let me know in the comments.